Real estate investing, even on a very small scale, remains a tried and true means of building an individual's cash flow and wealth. Robert Kiyosaki. The wise young man or wage earner of today invests his money in real estate. Andrew Carnegie. Now, if you are like anything like me and you spend a lot of your time on the internet looking into finance, you'll probably stumble across a lot of these quotes. Specifically, if you're on shorts a lot of the time, you're probably seeing a lot of these videos, a lot of these influencers saying how amazing real estate is and how it's the pinnacle of investing. And it's something that you should strive towards is getting into real estate. And in today's video, I'm going to break it down without any bias, without any personal opinion, just using straight mathematics on whether these quotes are actually true or if the math says otherwise. And I think no matter what side you're currently on, whether you think real estate is a good investment or you don't think it is, I think you'll be surprised of what the numbers have to say either way. So without further ado, let's jump into it. So I took the liberty of creating these spreadsheets here using real life numbers and scenarios. So just for a little bit of context, this property I'm using is in the Canada, Ontario, Toronto area. So the Greater Toronto area in Canada, which is an extremely popular place for real estate. And one thing to keep in mind as I go through these numbers, depending on where your demographic is, the numbers may be slightly different, but the general rule of thumb is about the same. So without further ado, let's bring it down. So I pulled up this property here. It's currently going for about $550,000. So it's in the downtown core. It's a 1+1, 2 bathroom, 500 to 600 square feet. And the annual property taxes are about $3,000, and the maintenance fee is about $408, and there's no parking spaces. So these costs are important because a lot of real estate gurus, when you listen to them, they miss a lot of these things when they're explaining their hypothesis on why real estate is so good. So I took the liberty of actually running the numbers in a real life scenario so we could get a clean cut, no BS, no surprises on what the reality is when you buy real estate as an investment and if you even should. So there's 3 scenarios here. There's a 20% down scenario, the 35% down, and the real estate guru 10% down scenario. So you can see here the down payments are here respectively, 110K, 55K, and 192K. And another thing you have to keep in cost is depending on your demographic, these may or may not exist, but in Canada they do. So if you have under a 20% down, you have to pay something called a CMHC insurance. So I added that here, another 15K. You have to add land transfer taxes and legal closing costs. So all in, you already have to fork up a larger amount of money regardless of the down payment scenario. So anywhere between 70K to 200K, depending on how much you're willing to put in the property. So let's continue on here. So let's say you do decide to go through into this. Let's look at what the cash flow looks like, because this is one of the best myths that people love talking about with real estate is how great of a cash flow machine it is, and how this illusion where you just put 70K down and all of a sudden you're going to make in like thousands of dollars a month and you're just going to play basically play Monopoly in real life. But anyways, we look at the number here. So I took the liberty of getting a listing here that's basically right down the block of this one. So the numbers are very realistic. So this is renting for 2.7K a month. Now keep in mind, this is a bigger unit. So the reality is this is actually going to be rented out for less on the market. But just to give the real estate bros a little bit of an edge, I'm going to give a generous income and say you're able to buy this and rent it out for 3K a month. So even if we do that, right, people just think you have to pay the mortgage and then you pay them rent. So people just say they calculate the mortgage costs and then they calculate the rent. And then they'll subtract that and be like, oh, look, I could make $500 to $1,000 a month pretty easily with real estate. But unfortunately, it's not that easy. the reality is, look, if you look at the numbers right here. So not only do you have to pay the mortgage, depending on the how much down payment you put in, it fluctuates, but there are these other hidden costs that are not in the forced investing, where essentially you're just paying it and you're losing money. So you have to factor in property taxes, you have to factor in maintenance fees, you have to factor in the home insurance that you have to pay. And another big thing is in-unit repairs. So if something breaks in there, it's your responsibility to pay for it. And this is a pretty low amount I'm estimating here at just 0.5%. So that's something you have to keep in mind as well. So if you look at the reality here, you can see that the monthly cost of just owning the property is anywhere between 3,000 to 3.8K, depending on your down payment scenario. So if you look in the reality, you're actually not cash flowing anything. In fact, you're in the negative. So you're forcing money out of your income to pay for this investment essentially. Only in this scenario here where you're putting up 35% up front, so closer to that $210,000, you're actually positive. I mean, it's a whopping $19, but you are technically positive and you are gaining appreciation on the property over time. So that's a big thing the real estate people are going to say. What if they look at this, they're going to say, well, what you're looking at this negative is you're actually doing like a forced investing because you're actually putting in this money into the mortgage, which helps with the appreciation of the property. So even if we want to keep that mindset, let's start looking at the numbers. So the real estate bros, they can have technically a point. So if we're going to take the numbers here and we're going to say this property that went for $550,000 has appreciated over 10 years to about 814K. So this nice shoebox here that you bought for 550K with inflation and everything has went up to about 815K in 10 years, which is pretty diabolical. But to be honest, this is very realistic and that's why you could still make a point. So anyways, by the time that happens, you're going to have a remaining debt of anywhere between 250K to 370K, depending on your scenario. Your selling costs, you also have to factor in. So let's say in that 10 years you decide to sell, you have to pay 5% with those fees. You have to also subtract the 10-year cash flow. So this is the money that you were losing every month negatively. And then you also factor in your initial investment. So when it's all said and done, technically, what you're looking at is you are actually in a profit. This can be actually a viable solution. And for those of you that are skeptical about real estate, this kind of does prove that in a technicality, in a perfect scenario, keep that in mind, a perfect scenario, it is technically possible to be positive. So you're seeing here the total net profit is anywhere between 245K to 323K. So you get an annual ROI of anywhere between like 7.8 and 13%. So if you're a real estate influencer, this is you right now as you look at these charts. You're jumping for joy, and this is proving the case that real estate is king, and this is what you should be striving for. But I'm going to tell you that that is not the case at all, because what would happen if you take the same amount of money and you put it in more liquid, accessible investments that don't involve all of the headaches that are involved with real estate investing? And that's where I want to jump to, which is the kill shot. So this is a fairly simple chart. It's comparing what would happen if you took each scenario's down payment and instead of putting it into a real estate condo, you're putting it into gold, S&P 500, the Magnificent Seven, or Bitcoin. So if you see here in the real estate world, you are making this profit. So again, as I said before, 245K to about 290K in profit. But again, this is a high effort, low liquidity investment. So I'll get more into what I mean by that in a second. But if we compare it to gold, real estate did outperform gold. If we take a 8% compound annual growth rate using historical data, we can see that, real estate did significantly outperform gold, especially if you did the lower down payment scenario. You made quite a bit more money. Similar thing with the S&P 500, actually. You taking a 10.5% annual return, you can see that actually in the lower down payment scenarios of 70 to 125K, you're actually not making as much, especially in this 10% scenario. The real estate appreciated quite a bit more. But this is where it gets even more interesting, is you go down to the scenario C, and you can see the S&P 500 actually outperforms, maybe marginally, but it does outperform real estate. And it gets even more interesting when you go down here to the Magnificent Seven, taking about a 22% compound annual growth rate, and Bitcoin taking a historical 40% annual growth rate. And you can see that if you were just invested in either of these assets over the long term instead of real estate, you are absolutely in the profit way more than real. It's not even close. It's not even close. No matter what the scenario is, how much money you're putting in, it's not even close. And the reality is, if you're buying either of these assets, they are just a lot more liquid. They are a lot less effort. All you do is you just buy these assets, dollar cost average, and then that's it. Then you just walk away golden. And that's the reality, because the thing about real estate is this is a perfect scenario. These numbers I'm running are perfect scenarios where you can actually rent it out for a high amount, and you're actually just hitting these certain goals in the amount of money you lose. But the reality is, with real estate, all it takes is one bad tenant and a couple of things breaking, be it the plumbing, be it the electrical, be it the washing machines, drying machines, all of these things, because you're the landlord, you have to take care of that. All it takes is one of those, and these numbers look absolutely broken. These numbers could easily be cut in half just based on, having a few months of extreme negative cash flow. And that's kind of the thing, is like mathematics isn't going to show that, because in reality, these things happen more often than not. It's not a simple game of just putting in your money in real estate and you kick back and relax. In fact, real estate is more like another job. You actually have to maintain it and find tenants, maintain those tenants, maintain the property. There's a lot of hidden costs that even, using this 0.5% is just a low estimate. But if you're going to be in reality, it's going to be a lot more money than that. And that's kind of the point that I'm just trying to make here. And, these numbers kind of look even worse if we actually took 10 years in the past and you bought a condo in 2015 and you hold it on to now. So you can see, like, initial cash, I just took about $80,000 as the average you would put in 2015, so about 10 years ago. And you can see, again, real estate gets absolutely destroyed even more so when you're buying things like the Magnificent Seven and BTC. Now, of course, past performance doesn't guarantee future gains, but I did just want to put this in here for another perspective, just to show that in the past, these two assets have outperformed real estate. And honestly, if you look here, it's about $100,000 difference between the S&P 500 gold and Toronto's condos, the real estate. And I would argue that it's actually worth that 100K difference, because all you have to do for these assets is you just buy it in your brokerage account. For gold, you could, you don't have to necessarily buy the hard asset, but even buying the hard asset is very easy. You just buy the asset, you hold on to it, and that's it. You don't have to worry about tenants. You don't have to worry about maintaining the property. All of these things that can easily skew the net profit down another $100,000, $200,000 very easily, depending on what happens in the scenario. So either way, I digress. This is just a simple video I wanted to put out to kind of give a mathematical perspective on whether real estate is actually a good investment or not. And, at the end of the day, this isn't to really shit on per se if you do think real estate is a good investment and you are invested in real estate. This is more about a different perspective on how, in my personal opinion, I don't think it's the answer, just because of the kind of effort, the amount of effort and the risk that comes with actually losing a lot of your more initial investment and having to add more money that you don't get back, versus any of these other assets. It's all about just having a low time preference, holding over the long term, and you will reap the rewards without any of this stress. And that's kind of all I wanted to say. Like I did want to keep this video kind of short, but I could see I went on another 15 minutes here blabbling. But um, anyways, this is all I wanted to just say today. So, what I would love to hear in the comments is, do you agree with this analysis? Do you think that we should be actually buying real estate and this is what you should be striving towards? Or are you just always better off just buying any of these assets and just holding on to it long term? So I would love to hear that in the comments. But without further ado, if you enjoyed today's video, just please give this video a like, subscribe to my channel, and feel free to check out any of the other videos I have. They are related to things like this. And thank you for watching. I'll see you guys in the next one. See ya.